Welcome to The Explainer. So let's talk about the stock market. Because if you've been paying any attention lately, you might be feeling some serious whiplash. I mean, on the one hand, we're hitting all-time record highs, but on the other, it just feels kind of fragile, doesn't it? To help us make sense of all these mixed signals, we're going to dig into the work of economist Burton Malkiel. And really, this is the question on everybody's mind. You see investors popping champagne, pushing the market into places we've never seen before, but then there's that little voice in the back of your head going, is this party about to end? You know, has all this optimism just gone a little too far? So let's start with right here, right now, the present day, what some are calling the scary market. And you know, what makes it scary isn't just one thing. No, it's the wild, powerful contradictions that are right at the heart of it all. Right now, it feels like the economy has a total split personality. In one corner, you've got pure, uncut optimism. It's fueling these record stock prices. But in the other corner, you've got some pretty serious red flags flapping in the wind. Things like presidential tariffs, major concerns over these huge budget deficits. It's a total paradox.
And believe me, these are not just some abstract fears. This past spring, one of those red flags went up, big time. After some new tariffs were announced, the market didn't just dip, it took a nosedive. In just 1 week, the S&P 500, which is basically the benchmark for the entire market, dropped by 12%. It was a genuine freefall.
But then, just as fast as the panic showed up, it vanished. All it took was some talk of negotiations, maybe some delayed tariffs, and the market didn't just bounce back, it had its single best day in almost 20 years. That kind of whiplash is exactly what has investors scratching their heads, trying to figure out what's real and what's not.
And this brings us right back to that core question from Burton Malkiel. Is all this exuberance we're seeing today just a dangerous echo of mistakes we've already made? Well, to figure that out, we've got to look back.
You know the saying, history doesn't repeat itself, but it often rhymes. And when you're talking about the stock market, sometimes those rhymes are, well, they're deafening.
Just think back to the late 90s, the dot-com boom. It felt like a brand new golden age was dawning, right? Until the bubble burst and wiped out about 40% of the market's value. Then only a few years later, it happened all over again with the housing bubble. That triggered the 2008 financial crisis, which sliced the market clean in half. The pattern is, well, it's painfully clear. A period of almost irrational excitement, followed by an absolutely devastating crash.
And this wasn't just numbers on a spreadsheet. I mean, the wreckage was real. It completely wiped out people's retirement savings. It shook their faith in the system so profoundly that a lot of people started wondering if owning stocks at all, if it was even worth the risk anymore.
So what does any of this have to do with today? Well, many are arguing that we're hearing a direct echo of that same exact excitement. But this time, it's not about the internet. It's all about one technology, artificial intelligence. I mean, just look at this. The parallels are almost uncanny. Back in the 90s, the big revolution was the internet, and everyone was convinced it was a new golden age. Today, the revolution is AI, and the belief is exactly the same. The poster child for the movement back then might have been a company like Cisco. Today, one company seems to represent the entire boom, NVIDIA. In the scale of this new boom, it's honestly hard to even wrap your head around. NVIDIA, the company making the essential computer chips for this whole AI revolution, has seen its value just explode. Its market valuation soared past $4 trillion. Now that's a number built on a whole lot of confidence, and, as some critics are warning, a whole lot of hype.
Okay, now here's the historical red flag. This is the one that really makes you stop and think. When you measure stock prices against what the companies are actually earning, basically how richly valued they are, we are near an all-time high. In fact, the tech market has only been more expensive one other time in history, March of 2000, right before the dot-com bubble burst. So, you take all of this, the crazy volatility, the echoes from history, this massive AI boom, and it all funnels down into one single critical question.
And this is the question that Burton Malkiel really leaves us with. Look, the goal here isn't to predict the future. Nobody has a crystal ball. It's about recognizing the patterns of the past. So if this really is an echo of a previous bubble, what can we do to protect our own financial future?
That's the question every single investor should probably be asking themselves right now.